Hello and welcome students. In the last video lecture, I had explained you question number 6 of chapter number 6, that is retirement or death of a partner. It means that were bigger sums that we had started. Now in this video lecture, I am going to explain you question number 8 of your textbook, that is on page number 267. So first of all, let us read the question and then afterwards we'll move on with the practical solution of it. Jaya, Mamta and Smruti are partners sharing profit and loss in the ratio of 2 by 5, 5 by 10 and 1 by 10. Over here the three partners are there and their profit and loss sharing ratio is given to you, but it is given in numerator and denominator. It means it is given in fraction to you. We have to find the ratio from that fraction. So you can see it is given 2 by 5, 5 by 10 and 1 by 10, right? So over here the denominators are same, that is 10 and 10, but to make the denominator same over here we have to multiply with 2. So if we multiply over here with 2, it will become 10, and in numerator if we multiply with 2, then it will become 4. So the ratio that would come to 4 is to 5 is to 1. So our old profit and loss sharing ratio amongst the three partners, that would come to 4 is to 5 is to 1. Now, balance sheet of the firm on 31st March 2016 was as under. The balance sheet has been provided to you. First of all, the liability side, that is creditors, general reserve. General reserve is a kind of a reserve and that is to be distributed amongst all the partners, including the retiring partner, in their old profit and loss sharing ratio. Then afterwards, the capital account of all the three partners. Current account. Now this is a new point over here. In the first chapter we have already studied there are two types of accounting methods, that is fixed capital method and fluctuating capital method. In this, whenever the current account is to be prepared, at that time all the entries related to partners capital account will be posted in partners current account. In case of partners capital account, only the opening balance, and if during the year if any of the additional capital he is bringing, then that is only to be recorded in the partners capital account. Other than that, all the other entries related to partners will be posted in partners current account, not in capital account. Again, because whenever we are having the partners current account balance given in the question, it means we have to follow fixed capital method. Fixed capital method means whatever is the opening balance, same balance we have to carry forward as the closing balance. So the capital, there would be no any change through the entire year. So whatever the transactions that takes place for the partners, that will be posted in partners current account. Okay. So here partners current account, that is given of two partners credit balance. Liability side it is given, so it is credit balance. That is 26,000 and 14,000. Bad debt reserve, that is given to you 10,000. Bad debt reserve is not subtracted from debtors on the asset side, but it is given on the liability side. Ultimately it is always having a credit balance. Then afterwards goodwill. Now this goodwill already we discussed. Whenever it is given in the old balance sheet, then it is the old goodwill, and that goodwill is to be distributed amongst all the partners in their old profit and loss sharing ratio. Then afterwards building, machinery, investment, stock, debtors, loan to Smruti. It means loan is given to Smruti, so it is one of the assets and future will receive that amount from Smruti. Then afterwards current account, that is debit balance of Smruti, that is given to you 10,000. Now moving on to the adjustment. Out of the three partners, Smruti retired on 1st April. It means there are three partners, Jaya, Mamta and Smruti, and that the third partner, that is Smruti, is retiring. At the time of her retirement, partners decided that rupees 4,000 is outstanding for rent payable. Outstanding for rent payable, it means it is increase in liability. In future that rent is to be paid. So it is increase in liability, and due to increase in liability, loss will occur to the firm. So it will be recorded on the debit side of revaluation account. Then afterwards interest on investment is receivable. It means it is an income for the firm. It is in future, at present that interest is not received, but in future it is to be receivable. So it is one kind of profit. Profit will be recorded on the credit side of revaluation account. Then afterwards investment to be sold for rupees 35,000, and goodwill of the firm valued at rupees 2 lakh. It means total goodwill is rupees 2 lakh. Out of that we have to find the share of the retiring partner, and that goodwill of the retiring partner is to be distributed amongst the continuing partners in their gaining ratio. So over here we have to find the gaining ratio. And last it is given, that is the new profit and loss sharing ratio of Jaya and Mamta, that is 1:1. It means both the ratios are given to you, old ratio and new ratio. So we can easily find the gaining ratio. What is the formula of gaining ratio? That is new share minus old share. Okay. Now moving on with the solution. As you can see on the board, I have prepared revaluation account, partners current account, partners capital account and balance sheet. Over here I have not prepared the bank account because you can see in the old balance sheet on the asset side, no any bank balance is given to you. So I have not separately prepared bank account over here. So only 3 accounts and 1 statement, that is balance sheet, that I have prepared over here. First one, revaluation account, partners current account, partners capital account and balance sheet after retirement. Okay. Now moving on, posting with the all the transactions. First of all, the opening balances of capital account, that is given to you 2 lakh, 1 lakh and 90,000. So here you can see in the partners capital account, always balance, opening balance is having a credit balance. So by balance brought down, that is 2 lakh, 1 lakh and 90,000. Then afterwards, the current account credit balance is given to you of Jaya and Mamta, that is 26,000 and 14,000. So you can see in partners current account on credit side, I have written that is by balance brought down of Jaya, that is 26,000 and of Mamta, that is 14,000. In the same way, asset side last entry is given to you, that is current account of Smoothie, that is 10,000. It means it is a debit balance. So you can see on the debit side that I have written 2 balance brought down in column of Smoothie, that is rupees 10,000. Now then afterwards, the next point, that is of goodwill, the old goodwill. Now that old goodwill is to be distributed amongst all the 3 partners in their old ratio. What is the old ratio? That is 4:5:1. So here you can see on the debit side that I have written 2 goodwill account. Always it will be, old goodwill will be debited to partners capital account. The journal entry for it, that would be partners capital account debit to goodwill account credit. So to goodwill account, the total goodwill that is given to you, that is 30,000. 30,000 that will be distributing which ratio? Old ratio. What is the old ratio? That is 4:5:1. So it would come to 12,000, 15,000 and 3,000. Then afterwards, after posting the opening balances and doing the adjustment of goodwill, the next one remaining, that is the accumulated reserve, that is general reserve given to you. So that general reserve is also to be distributed amongst all the 3 partners in their old ratio. Okay. So that will be on the credit side, you can see of partners current account. Already we discussed that all the other entries except the capital will be posted in the partners current account. So by general reserve, total value of general reserve that is given to you, that is 70,000. That 70,000 will be distributing in the ratio 4:5:1. So it would come to 28,000, 35,000 and 7,000. Then afterwards, moving on to the adjustment. The first adjustment that is given to you, that is rupees 4,000 is outstanding for rent payable. Now this 4,000 is outstanding for rent payable. Already I explained that it is increase in liability, and in future we have to pay this rent, so it becomes our liability. So due to increase in liability, loss will occur to the firm. So that loss will be recorded on the debit side of revaluation account. You can see in the revaluation account, first entry that I have written, that is to outstanding rent rupees 4,000. Already I have told that if there is an adjustment, then 2 effects would be there. So simultaneous posting in the balance sheet also you do it, so that afterwards you don't forget to do the posting of it. So you can see on the liability side, last entry I have written, that is outstanding rent rupees 4,000. Always there would be 2 effect of any of the adjustment. One would be debit and other would be credit. You can see over here on the debit side I have written 2 outstanding rent, that is 4,000. So liability side, that is credit balance. So second effect, that is credit effect. So outstanding rent, that would be 4,000. It means it is increase in liability. Then after second adjustment, interest on investment is receivable rupees 2,500. Now interest on investment is receivable. Receivable means in future it would earn profit for us. So due to increase in profit, it would be recorded on the credit side of revaluation account. So here you can see on the credit side I have written by outstanding interest on investment, that is rupees 2,500. Outstanding interest on investment, credit effect is given over it. So second effect, it is receivable. So it is an asset for us. So on the asset side you can see I have written last entry over here, that is outstanding interest on investment, that is rupees 2,500. Then afterwards, third adjustment, investment to be sold for rupees 35,000. Now what is the value of investment that is given to you in the question? That is 33,000. Now 33,000 investment is sold at price of rupees 35,000. So you have earned the profit of rupees 2,000. So by selling the investment, you are earning a profit of rupees 2,000. So that profit is to be recorded in revaluation account. See, in revaluation account, credit side I have written buy investment rupees 2,000. How this 2,000 came? That is 35,000 minus 33,000. That came to 2,000. Now the simultaneous entry in asset side, you can see investment that I have written, actual value that is given in the old balance sheet, that is 33,000. 33,000 plus profit, that is 2,000. So now the value came 35,000. Now that 35,000 value of investment is sold for rupees 35,000. So outer column there would be nil balance because now that asset has been sold. So no any balance would be shown in the outer column. Then afterwards, fourth adjustment, that is goodwill of the firm is valued at rupees 2 lakh. Now this goodwill is the entire goodwill. Out of that we have to find the share of the retiring partner. Out of the three partners, the partner Smruti, that is the retiring partner. So her share that would come to 1 by 10, right? So 2 lakh multiplied by 1 by 10, it would come to 20,000. So share of retiring partner in goodwill, that would come to 20,000. Now that goodwill is to be distributed amongst the continuing partners in their gaining ratio. So you can see I have calculated the gaining ratio over here, that is gaining ratio of Jaya and Mamta. For Jaya, the new share, that is 1:1, already it is given in the question in the last adjustment. So 1 by 2 minus the old share that we have found out, that is 4 by 10. So 1 by 2 minus 4 by 10. Taking the LCM, that would come to 10. So 2 5s are 10. 5 minus 4, it would come to 1 by 10. In the same way for Mamta, again the same, take LCM 10. So 2 5s are 10. 5 minus 5 would come to 0. So there is no gain, no sacrifice in case of Mamta. So entire share of goodwill of Smruti will be available to Jaya only. So our journal entry, that would be continuing partners capital account debit to retiring partners capital account credit. Over here only one partner is gaining the share of retiring partner. So journal entry, that would be Jaya's capital account debit to Smruti's capital account credit. So Jaya's capital account debit, it means you can see on Jaya's capital account debit I have written over here 20,000 and name of the opposite party. So it would come to S capital account credit. So over here I have written 20,000 and S capital account credit. It means credit side you will write the name of the opposite party, that is by J's capital account, and in case of Smruti's column you will write 20,000. Okay, so understood the point of goodwill. Now the last adjustment, that is the new profit and loss sharing ratio, that is given to you in the question. Now all the adjustments that we have completed. Now looking at the old balance sheet, the posting of the entries on which there is no adjustment, we have to just post it as it is in the balance sheet. First entry on the liability side, that is creditors rupees 90,000. On creditors there is no any adjustment, so as it is you will be writing creditors on the liability side in the new balance sheet, that is 90,000. Then afterwards general reserve, already we are distributed amongst the partners in their old profit and loss sharing ratio. Capital account opening balance that we have written, current account opening balance that we have written, bad debt reserve that is given to you 10,000. So bad debt reserve also no any adjustment, so as it is in the new balance sheet, that is rupees 10,000. Now liability side that we have completed. Now moving on to asset side. Asset side, first entry, that is of goodwill. Goodwill, that was the old goodwill that we had distributed amongst all the three partners in their old profit and loss sharing ratio. Then afterwards the building value that is given to you 2,82,000. No any adjustment is there on building, so as it is building value that I have written 2,82,000. Then afterwards machinery that is given to you 1,45,000. So machinery also as it is no any adjustment, so 1,45,000. Then afterwards investment that is given to you 33,000. Now adjustment already I have shown the calculation because adjustment was there on it. So 33 plus 2,000 profit sold at rupees 35,000. So no any balance in the outer column. Then afterwards stock also as it is because no any adjustment. So stock balance that is 20,000 as it is. Now loan to Smriti that is given to you, that is 30,000. So loan to Smriti that is having a debit balance that is given to you. So here you can see on the debit side that I have written to S loan, Smriti's loan that is given to you 30,000. Okay. Then afterwards, due to sale of investment, one point is remained, that is due to sale of investment, cash is received to the firm. Whenever you are selling any of the investment, then investment goes out of the firm. So investment account that would be credited and cash comes in. So cash account that would be debited. So our journal entry that would be cash account debit to investment account credit. So cash balance will be increased by rupees 30,000 because that much amount of cash came in the firm, right? So over here cash balance, basically in the old balance sheet in the question it was not given to you, but now the cash balance has been arised of rupees 35,000. So simultaneous entry, that is over here 35,000 will be deducted and over here cash balance will be increased by rupees 35,000. Then afterwards loan to Smriti, then afterwards current account of Smriti. Already we had done the posting of the opening balance, that is the debit balance of Smriti. Now all the adjustments and all the balances from the balance sheet that we have done the posting in the new balance sheet after retirement. Now trying to close all the accounts. First of all, we'll close the revaluation account. In case of revaluation account, you can see that is only one adjustment is there on the credit side, two adjustments are there, so total that would come to 4,500. 4,500 minus 4,000, that would come to 500. So profit that would come to 500. That profit is to be distributed amongst all the partners, including the retiring partner, in their own profit and loss sharing ratio. So here you can see I've divided this profit in the ratio of 4:5:1. That came to 200, 250 and 50. Next posting that would be in the partner's current account. So by revaluation account, that is 200, 250 and 50. Okay, so we have done the posting of the revaluation account, close the revaluation account and transferred its next entry to partner's current account. Now we have to find the closing balance of partner's current account. Okay, so Jaya's total that comes to 54,200. Over here 54,200, difference that comes to 22,200. That is the closing balance of Jaya's current account. Now which side total is bigger? That is credit side total. So this is credit balance. Difference comes on debit side. It means it is credit balance. Same way it is for Mamta also. Total that comes to 49,250. 49,250, difference comes on debit side, that is 34,250. See, I have written over here question mark. Question mark means this value we have found out. Okay, so both the balances that are coming credit balances. So simultaneous posting that I have done in the new balance sheet, that is current account on the liability side because it is credit balance. So Jaya I have written 22,200 and Mamta that is 34,250. You can write separately also in the outer column, and by doing the total also you can write that is 56,450. Okay, now moving on to Smriti. Now for Smriti, the total of debit side that comes more. You can see that is 10,000 plus 30,000, 40. 40 plus 3 it means 43,000. Debit side total is coming more. So 43,000 both the side that I have written. Difference comes on credit side. Difference comes on credit side. So here you can see I have written by S capital account because this balance of partner's current account that will be transferred to his capital account. The reason for that, because now that partner is not existing as a partner of the firm. She has retired from the firm. So whatever her share in the partner's current account, whatever her balance, that will be transferred to partner's capital account. And that from the partner's capital account, whatever the difference arise of the retiring partner, that will be considered as her loan. And that loan will be payable by the continuing partners. Okay. So over here you can see the difference that comes on the credit side, that is 15,950. Over here also I have done the question mark so that you can understand that this value we have found out. Now by S capital account, it means on partner's capital account it would come to debit side, right? So over here you can see that I have written to S current account because from current account this balance we have got. So to S current account that I have written, that is 15,950. Now opening balance, that is we have already written 2 lakh, 1 lakh and 90,000. So opening balance, closing balance for Jaya and Mamta would be as it is. No any change would be there. that is 2 lakh and 1 lakh. But in case of Smruti, the opening balance that is 90,000. From that current account balance that is 15,950. That 15,950 that will subtract the remaining amount that would be 74,050. 74,050 that would be considered as her loan, because now that partner is not existing as a partner, that has been retired. So whatever her balance would be considered as a loan, and that is payable by the continuing partners. So in loan account that would go to 74,050. Never the retiring partner's balance would be shown as a capital in the new balance sheet. Okay, so over here you can see capital I have written of only 2 partners, even current account balance also that we have written of only the 2 continuing partners. Okay, and for the retiring partner we have considered it as a loan. So as loan account, that is 74,050 that we have got from the current account, from the capital account of that partner. Okay, so as loan account that came to 74,050. So now no any adjustment is remaining. Already we have closed the 3 accounts. Now we have to move on to the balance sheet. If the balance sheet gets tallied, it means it's our answer is correct. Okay, so over here we have to do the total of the liability side and asset side. Before that we have to see that any of the adjustments or any of the entry from the old balance sheet has not remained. Already we have verified. So after that we have to close the balance sheet. You can see on both the sides the total comes equal, that is 5,34,500, 5,34,500. So from that you can see that our answer is correct. So till now I hope you have understood this entire sum. That's all for today, students. In the next video lecture still we'll be continuing with the bigger sums for extra practice. Till then, goodbye, stay blessed.